When large jobs require moving massive amounts of snow, get the work done quickly and efficiently with the Western Pile Driver and all-new Pile Driver XL pusher plows, both featuring Trace Edge technology. These pushers scrape down to the pavement with an advanced cutting-edge system that has independent 2-foot sections that move vertically, oscillate, and trip. Get more jobs done faster with the Western Pile Driver lineup of pusher plows.
Mike Bott from Frost Solutions, one of the owners of the company. What we do is provide a mini weather station to give you a tailored forecast to those particular locations so you know where and when and what to do in those parts of town. You know there's 2 or 3 or 4 or 5 different ways that people can experience tremendous value having a technology like this.
Welcome to The Entrepreneurial Journey with your host, Dave Westcott. The Entrepreneurial Journey is a weekly podcast that streams live every Tuesday at 9:15 a.m. Pacific on Dave's YouTube channel and LinkedIn profile. Now here's Dave with this week's episode.
Good morning and welcome to The Entrepreneurial Journey. I'm your host, Dave Westcott, and I've got with me special guest, Joe Camberato. Good morning, Joe.
Good morning, Dave. Thanks for having me on the show. How's it going?
It's going beautiful, man. It's a beautiful day. You're up in New York, aren't you?
Yes, Long Island, New York.
I actually just left New York.
Nice. I hope you had a good time.
I was actually down in the city. Probably not your favorite place to go.
No, I love it out here. It's beautiful where I am. I do like getting in the city every once in a while, but I love the calmness out here.
Yeah, I took the kids to a Broadway show. I took them to see Aladdin. They had a great time with this.
Yeah, nice. It's awesome.
It was a lot of fun. So I was really excited for this show. A crash course in FinTech. What is that for our audience?
You know, it means a lot of different things depending on the company, but it's basically where you merge like financial and tech. So FinTech could be, my business is business lending, started out, just old school manual, relationship based. And now we've used technology to make the financial part of our business move faster. So, just really basically delivering for our customers faster, easier. But we still have a hands-on approach of like a great team of people. We have almost 100 employees, and you would work with an advisor, and if you needed business lending, they can go through your options. But the tech helps speed up the process of whether it's application, document collection, and underwriting to deliver approvals and things like that quickly. But then, FinTech, there's mortgage companies that have merged the financial and the tech together to move faster. Think of like Rocket Mortgage, and I'd say we're like the Rocket Mortgage of business lending, right? So you have Rocket Mortgage on the mortgage side, then you have like Esurance, right? That has taken an old school insurance business and moved it online, where you can basically get insurance without having to talk to anybody, all online, right? So and then personal loans and credit cards and different things, all of these different platforms that are out there today, where they've taken technology, and a lot of it's being done outside of banks. Like we're a non-bank lender. So there's a lot of like non-bank lending and other up and coming companies that are doing, whether it's student loans, personal loans, credit cards, where they're not the actual bank, which is very different from back in the day.
That's awesome. And your business is National Business Capital.
Yeah, that's correct. Yes.
Yeah, that's awesome. And so what I love about this is, one, I'm a snow guy. I'm in the snow business, doing a lot of snow plowing. And this last 2 years for snow guys have been pretty tough. Just with low snow averages, low snowfalls all across the Northeast to Midwest.
Yeah.
Excuse me. And you hear a lot of guys talking about, hey, I need capital. I need some money. It's not as successful with my traditional bank. So what you're saying is there's solutions outside of going to your bank, getting a line of credit that maybe have a little bit different interest play, or they have a little bit different setup, but you can run non-traditional financing through your business.
So yeah, so what's really interesting is I founded National Business Capital in 2007. We've grown into a leader in small to medium sized business lending. So typically deals, 100,000 to 10 million is where we focus of funding sizes, and that's typically companies doing a million in revenue to 100 million in revenue. So wide range. What's happened is, and what's really interesting, I think it was like around 2019 heading into 2020, non-bank lending passed bank lending for the first time ever, which is really wild. And
Wow.
and there's been this whole shift that's happened where a lot of businesses, especially, are working with non-bank lenders. And this has expanded to, the typical companies we work with in that million to $50 million range of revenue. But now even companies that are doing 100 million, 500 million, $1 billion in revenue, are working with non-bank lenders and doing private credit deals because it's easier, can move faster. And usually what happens, a lot of our clients, it's not, we don't like work with clients that are in bad situations. We're like a growth lender. So we're working
Mm.
with companies that are growing and scaling. And usually two things happen is they outgrow the bank, right? So they got a line of credit from a bank, but the bank, they're just growing too fast and the bank can't extend their line of credit or give them more capital with their growth. Or they're growing fast and maybe they're taking some losses or they're only showing a little bit of a profit because they're constantly reinvesting and growing. They've got an opportunity to buy more inventory. They're doing multiple jobs at once. So they need to fuel cash flow, or they want to acquire a business. And so we're working with those really two type of customer profiles. I've outgrown, like my bank can't keep up, or I'm not bankable because I'm just growing so fast. And we really look at cash flow, and we also are very entrepreneurial, and we work with a lot of entrepreneurial businesses, and we just want to understand. We have like an old school type of underwriting where we want to understand what you're doing, what you're using money for, and if it makes sense, we could do a really great job of wrapping your heads around your deal and getting a transaction done. Where banks are going to look at really 3 to 4 pieces of collateral. The first is the most obvious, real estate. This is for business lending. So it's real estate, then heavy machinery, and then it's B2B receivables, and then it's inventory, right? Now think about how many businesses are out there that don't have that collateral. A lot of businesses don't own real estate, or want
Right.
to put up their real estate for the business. Then you have, like, maybe you don't have heavy machinery. Like think about an e-commerce business that's selling online and drop shipping and not holding inventory and selling direct to consumer. So you don't have B2B receivables, you don't have inventory, you don't have real estate, you don't have hard assets. So there's a lot of great companies out there, like contractors, even like restaurants and great businesses that are growing. There's even some wholesale distributors that aren't holding inventory anymore, or maybe they do hold inventory, but they're selling to direct to consumer, so there's no B2B receivables. Maybe they don't have heavy machinery. So there's all these companies out there that are great, but when you go to a bank, if you don't really have at least one or two of those core pieces of collateral, that you don't fit into the bank's lending formula. And the big challenge I see is when you go to a bank and you get declined, you're like, I don't get it. I'm profitable. Why am I declined? A lot of times you don't get that information back from the
Right.
representative that you're dealing with at the bank. And a lot of times that underwriting information is never shared with the representative that you're speaking with, because they just collect the package. It gets submitted to underwriting that's probably in another state. And there's just, it's an approval or decline. There's no like real information share.
Yeah, that's awesome. I think on my journey, I've always kind of stuck with that small community bank.
Yep.
The 6 locations, excuse me, the credit union type business that's been, good to lend with, probably, a little easier terms. The Bank of Americas and the Wells Fargos are places that I haven't personally gone to. But I think
Well,
that's really, really, go ahead.
yeah, one thing I want to say to that, and this whole shift that's happening that most people don't understand. I'm in this every day. If you're not in this every day, you don't really realize what's happening. The
Sure.
The Bank of Americas are the big brand banks. I don't just want to pick on them because it's the big brand banks, all the big names that we all know of, right? The brands that have been around forever that are really have a majority of money that's in the banking system. Those banks want to they want to do deals. A small deal for them right now is 10 to 20 million dollars. So they want to lend 10, 20, 50 million, 100 million. A lot of people are like banks aren't lending. No, they are, but they want to do very big deals. 10, 20, 50, 100 million, 500 million, a billion plus. So one of those like Wells Fargo, Bank of America, Chase, they may do $100 million deal or 500 million or $1 billion deal. There could be three banks behind that participating or syndicating together to do that deal.
Yeah.
And even the community banks, what's happened is they even want to do deals $5 and $10 million. They don't want to do the million or the $500,000 because the underwriting process is the same for a $500,000 or $1 million or $2 million that is for 10. Then what's happened is, right? So all that stuff, 10 million under, is really going to really start to really be done as we move into the future by most of the non-bank lenders. What happens is banks need deposits. So you're right, like the local community bank, credit union bank, those guys were great to work with, super hands-on. They get it, they shake your hand, they do a deal. What's happened right now for those guys is a lot of deposits have moved away from them because everyone got scared with the bank run last year and it's flowed to the bigger banks. So every time a bank lends, there's got to be their lending versus cash on hand. There's a ratio that they have to, a formula that they have to adhere to and they're regulated by. So the little guys are having issues getting those big deposits. And then separately, if they're going to lend and do a deal, they'd rather do a $10 million deal because that's to a bigger business and they require that you move all those deposits over to them. So they're doing those bigger deals to get access to the bigger deposits. And really the lending is a carrot to get your deposits. So the smaller companies that are going to qualify for $500,000, million, 2 million, 3 million, 5 million, those are small deals to banks right now. A lot of those aren't getting done, and a lot of those companies are having, challenges. You may get $250K, $500,000 line of credit, but then once you go out of that formula for the bank with the collateral, that's another issue. If you don't have it, they don't even want to deal with it. So there's this whole shift that's happening, and banks are actually lending. Like banks are still lending to those small companies. The banks are lending to the non-bank lenders. They're giving the non-bank lenders 50 million, 100 million, $200 million plus credit lines. And they're saying, hey, you go deal with all the underwriting, the collection, the process, the managing that risk. Plus the non-bank lenders don't have the same regulation. So it's very interesting, this shift that's happening that most people don't know about.
So they're kind of on some level, they're outsourcing it to a
Exactly.
lender, a non-traditional lender, so that they can reduce spend, reduce internal costs. They're doing the work. They're taking the risk, if you will. Okay, that's really interesting. That's an education, man. That's really good stuff. So for a guy out there who's trying to make that first $1 million in revenue, he's just trying to get there. Is that the right source for you, or are you more in that, hey, I'm the guy trying to get to 10 million in revenue?
We really, like the folks that we're really working with are, probably at $1 million, 2 million in revenue already. And they're, we're want to help them get to 5, 10, 20 million plus. If you're doing $500,000 in revenue, you're trying to get from $500,000 to $1 million. We can work with those folks, and we're happy to help you, and help you get there. But really, our core customers are doing like, 1 to 25 million, and they're trying to get to that next level.
Yeah. How long does someone do a loan with you? What does that look like? Is that a 5-year period, a 2-year period? What does the ideal customer look like?
Yeah, I mean, if they're financing equipment, they want to do an equipment purchase. So construction, trucks in your small removal business, plows, things like that, tractor trailers, restaurant equipment, in the kitchen, tables, chairs, furniture, fixtures, manufacturing equipment, that stuff. We can finance that stuff, 2 to 5 years. Okay. And then, if there's B2B receivables, inventory, we have some like revolving ongoing lines of credit. And then we have a term loan product. If you don't have the assets and things I'm talking about, that's typically like a 12 to 36 month term.
Okay. 12 to 36-month term. I love that little sign behind you that says fearless.
So
Fearless.
Exactly. That's it. It's fearless. Yes.
The fearless. What is that? Why did you put that up there? What's the story behind that?
Well, that's a cool one. That's actually by Peter Tunney, who's an awesome artist. And
Okay.
I had a really cool painting commissioned by him, and it's called "The Time Is Always Now," and it says those words, and then within the painting is a bunch of cool photos and stuff. It's really the whole history of my life, and it's really all about the time is always now, and most importantly, to fear less. So it was a cool thing that he gave me along with the painting.
I love the fearless because in business it can be on the
Well, it's
on the
everything.
journey. Yeah, man, totally. It could definitely be everything for sure. How did you get started out?
But and just to add to that, Dave, I mean, my mindset and overcoming fear has been the most part of my success throughout my life. Like, because it's really everything in business. It's 80% of its mindset, and if you don't overcome those fears, then you either never get started, or when things happen in your business, you'll get stuck. So by constantly controlling my mindset and overcoming the fears, it's helped me get to where I am, and it's
How do
been a
you
big
do
part of my
that?
success.
How do you do that? Because I think so many guys they can't get past the mental block.
Yeah, it's not like it's not an easy thing to explain, to be honest. I mean, someone said to me once when I got started, I was dealing with a lot of challenges, issues. I mean, the first 5 years, 7 years of getting started were really, you're fighting, scratching, clawing, blood, sweat, and
Yep.
tears to get there. And I founded my business from zero without private equity. And even if you raise private equity, you still have to stick to core business fundamentals to grow a real company. But I think it's constantly putting yourself into that mindset. I mean, I work out, I meditate. I also like the things that get thrown at us. Sometimes we get so stuck in it, and it's like, well, like that I can overcome that. When I first got started, someone shared this story with me. I've shared it, many times. Um, I was stuck. I had issues. I was racking up credit card debt. I mean, you name it, to get the company going. House on the line, everything. I went all in. And I was kind of like stuck, and they said, "Hey, man, you're not dying, you don't have cancer, and you're not going to jail." And I said, "Like, what are you talking about? I'm coming to you for business advice." It was a really, really good entrepreneur. I'm like, "I'm trying to like figure this out. You're talking about," and he said, "Well, listen, a buddy of mine just got diagnosed with cancer. He's got 6 months to live." And this was in like 08, 09. This is I
Yeah.
founded in 07. I started a financial company
Tough time.
in 07, going right in the 08, 09 recession. Worst time ever to start a financial business. You can argue maybe it was the best time ever now, but in that time period, for me, it was the worst time ever. And I mean, it was all on the line. And he said, "Hey, listen, a friend of mine, lost, is got 6 months to live, stage 4 cancer. And right now in Dubai, people are fleeing the country. They're leaving. There's vehicles. There's Mercedes. There's more Mercedes-Benz, Bentleys, Ferraris, Lamborghinis in the parking lot with dust on them, because in Dubai, people fled the country. If you don't pay your bills, you get thrown in jail, and you can't get out of jail till you're caught up on your debts." So he was like, "Hey, what?" And that's a true story. What a great place to live. We're in America. Like, you'll figure out, you'll get yourself out of your credit card debt. You're not going to get thrown into jail, and you're not dying. You'll figure it out. And there was like this shift that happened in that moment, and it really, I was like, wow, let me just focus on what I can control. And there's just so many things that are always going to happen out of your control. So I just choose to focus on what I can control. And the reality is, like, a lot of it's not life and death, and it's not easy to keep yourself in that place, but you really have to work in it. It's like mindset's like your hygiene, like you shower every day to stay
Yep.
clean and smell good, right? Like, you have to work on this stuff, on a daily practice. So getting moving, physical activity, working out, meditation, it really helps me, get grounded.
Yeah, that's awesome. What kind of working out are you doing?
I just, weight training, cardio. I got a little setup in my basement, so I hit that for 30 minutes in the morning. I meditate for, anywhere from 8 to 15 minutes. And then I also, try and get to the gym once or twice a week.
That's awesome, man. My CEO coach, I think you might know him. He's got me running a marathon.
Oh, I heard about this. And I heard, that's right. He said, I think he sent me like a video or something that you shared with him. I thought that was awesome, man. That's great stuff.
Yeah, I broke my ankle last June 26th. When I broke my ankle, I gained like 50, 60 pounds. It just sitting there, right? It rocked me, man. Hardest thing to ever to get back from. And John said, "Hey, you want to run a marathon?" And I said, "Okay." So I've been training for this marathon, and been losing, 20 pounds, that sort of thing, getting fit. I got to run 14 miles this coming Saturday. And I'm telling you what,
it's coming up fast.
I'm trying to get my mind around it. Like the fearless thing, like I'm trying to think 14 miles. Oh my God. I mean, it's a lot, man. I mean, it's
well, don't think about it. Just do it.
Right? There you go.
Less thinking, more running.
That's right. I'm gonna take that advice into Saturday morning, and we'll see how that goes. But I love the workout. I love getting the mind going and getting all those things moving in the right way. I gotta ask you, why start a financial business in the midst of financial crisis? What was happening there?
It's good question. Well, no one knew at that time when I got started, no one knew what was ahead. In 07, everyone thought the economy was rocking, and most people did not see what was really coming ahead with the 08, 09 crash. I was in the mortgage business. I did not love what was going on, and I felt like I needed to make a move. But what really, I was very interested. I was looking into different things, and I really wanted to get into like commercial deals. Like I liked working with business owners. I had a lot of referrals that were all self-employed business owners, and a lot of them kept either asking me for a business loan, or were a lot of them were really refinancing their homes or using their home equity lines of credit to fuel their companies, because even back then, it was still hard to access business lending through banks. It was getting masked back then by the easy access to pull money out of your home. So I felt like things weren't really going well in 07, and you could start to see mortgage credit deteriorating, guidelines tightening, and just the loans that they were doing made no sense. But I said to myself, I said to the clients that kept asking me for business loans, why don't you just go to a bank? They all shared to me how difficult it was to get a business loan from a bank still back then. And I started to they were like, well, can you help me? So I started to take one deal at a time, just as like a favor, and started to go to like my network, and different banks pointed me to different banks. And then some of those banks pointed me to non-bank lenders. And even back then, there was still this whole world of non-bank lending that no one knew about. This is 05, 06 when I started doing this. Back then, a lot of those companies, those lenders, didn't have websites. You only really found them through, like your trusted advisor, and whether it was your accountant, attorney, like some sort of business advisor, consultant that came from that world of lending. And there was this whole world of non-bank lending, and I was like, and I started to get this deal done and that deal done, and I said, wow, this is amazing. How is there? I came from the mortgage brokering world, where there was mortgage brokers. How is there was no brand name like business loan brokerage. So I said, I want to go create that. And I really loved working with the business owners. And so I set off, incorporated in 07, and really started to get after it, and then went right to the 08, 09 recession. But what I did say was, if all this mortgage lending stops, business owners are going to need access to capital. They're not going to be able to get it from their homes, and there's alternative sources that are out there that no one really knows about. I wanted to bring all of those lenders together and create a streamlined process. It was very fragmented. So I started to do that very slow and steadily, and then started to build tech, hire people, process systems, brand, and then just kept reinvesting and growing from there. And what happened after the 08, 09 crash was this whole non-bank or alternative lending boom. And that's only continuing to accelerate. and it's actually moving upstream to larger companies now. So it's been a really wild journey. It's 16 years since I got started. We've funded $3 billion in deals, and that number is only continuing to accelerate year over year.
I love it. We're coming real close to time here. I got just two final questions for you, and then we'll wrap this up. This has been an absolutely fabulous call. If anybody's out there, get a hold of National Business Capital if you're looking to grow and you're looking to build that business. Amazing company. Get in touch with them. Joe, what's one tip financially that you would leave with our audience? And then from there, how can people get a hold of your business today?
Sure. Yeah, I think what comes to mind easily, and you really got to know your numbers and like dive into the numbers and what's working. And I think especially like if you're either going through a challenging time, or a lot of us had to reset through COVID and get really clear at the business, or if you're just getting started, there's a time and a place to do the big picture stuff, but then there's a time and a place where you got to really focus on the money and sometimes take those path of least resistance to make money. So, don't get wrapped up in doing all this big picture stuff if that's not the right time and place. And, we're all really running mini hedge funds in our businesses. Like, our job is to deploy capital and get a return as a business owner. And that could be through human capital, like hiring people, or also marketing. So you got to really understand your ROIs, or where you're really making your money. And you got to move from gut feeling to really looking at those numbers. And sometimes it's helpful to pull in like a fractional CFO or something like that to help you get clear. Because a lot of times entrepreneurs, we run off our gut feeling, and that's great, and it'll get you to a good place. But there's a certain point where you really got to get clear on like really where you're making money. And sometimes you love doing this one thing or selling this one thing, and you think it's really working well, but it's not. So get clear on those numbers. It's super important. And you can find, you can check out my company. Just go to nationalbusinesscapital.com. And I share a lot of tips and things like this on my social media. I've got hundreds of videos on YouTube. You can go to Instagram, YouTube, or LinkedIn. It's just at Grow by Joe. That's Grow by Joe, Joe, my name. And check that out. Follow me, subscribe, comment, send me a message. I'm happy to reply and help.
Grow by Joe. That's super simple. So if you're out there in the audience today and you're listening and you're looking to take your business to the next level, I think you gotta reach out to National Business Capital. Absolutely fantastic. This has been a great crash course in what it takes to run a business financially and what that looks like. And I really love what you said. You've got to stop listening to your gut and really look at the analytics, look at the details, look at where the money is going, look at where your return on investments are. I think so many entrepreneurs, so many business owners just want to live by their gut.
Yep.
Their
100%.
Gut directs them.
Yeah. And the gut is great. Like, the gut's made me successful. Like, I think I listen to my gut. I have a good gut. But if you could pair your gut with the analytical, the financial part, game changer.
Absolutely a game changer. That's some of the best advice we've heard on the show. Joe, it's been absolutely fabulous having you on. Thank you so much for your time this morning. It's been a pleasure to speak with you. I know that I've learned a lot. I'm sure that our audience has too as well. I'm your host, Dave Westcott. Follow me on LinkedIn, Facebook, Instagram, anywhere it's social. Best place to send me a direct message is LinkedIn. And check out the marathon training on YouTube. Subscribe to the channel, hang out, and listen. Subscribe to Grow by Joe. Check it out. Grow by Joe, Instagram, YouTube, Facebook, anywhere where it's social. This has been an awesome show. We'll see you next week, 9:15 a.m. Pacific Standard Time. Thank you, Joe.
Thank you, Dave, and good luck on your run. Remember, don't think and just keep running.
Don't think and keep running. I got that one written down too. I'm gonna call them Joe-isms. I love it.
Good stuff, man. Good luck, man. I wish you success on the run.
Thank you, brother. Have a great day.
You too, guys. Be well. Take care.
Mike Bott from Frost Solutions, one of the owners of the company. What we do is provide a mini weather station to give you a tailored forecast to those particular locations so you know where and when and what to do in in those parts of town. You know, there's 2 or 3 or 4 or 5 different ways that people can experience tremendous value having a technology like this.
Introducing the all-new Western Enforcer V-Plow. Engineered with all the features, efficiency, and performance of full-size Western V-Plows, built specifically for your half-ton truck. For more information, visit westernplows.com.